Well, our next guest, if you will, he actually has this whole major strategy on how to handle this interest rate stuff. And I want to bring this in. It's a major mortgage and interest rate strategy announced by our friend, Dave Ramsey. Talk us through this, because you know what? I feel like, wait a second. Has Dave been listening to your show and just took notes and said, hey, I'm going to announce this a major strategy, when quite frankly, Art has already done this many times? But please take us through this major announcement.
Yeah, I'd like to take credit for it, actually, and maybe I should reach out to him and say, hey, can I get half that check you're getting for making these announcements? But I don't have quite the notoriety that Dave Ramsey does. But yeah, Jeff, you're right. I mean, I took a look at that article when that was brought to our attention, and I had to chuckle a little bit. And again, this is another example of how I think the media and their use of adjectives, I'll say, can really be overdone at times, because you're right. The headline basically was, Dave Ramsey makes this major announcement about mortgage and interest rate strategies. And I just thought there's got to be something more to this. So I read the article, and it was, again, it gave me a pause. It kind of just made me chuckle. Why? Well, he actually had 6 points, total of 6 points of this strategy. Well, guess what the first one was? It was, look at and what was interesting about the article is it started off talking about the purchase market, but it very quickly switched to just talking about refinancing. And it was actually the refinancing transaction where he had these 6 major points that he wanted the readers to know about. Well, guess what the first one was? Review the numbers. Make sure that the refinance transaction that you have available to you makes sense in terms of what kind of rate you're going to get, what kind of monthly savings you're going to get, and what it's going to cost you to get that refinance. So review the numbers. That was his first major step, or of his strategy. And then the second step, as part of this major strategy, was shop around. Well, that's kind of a duh moment, right? Of course you should shop around. You should talk to more than one lender. And when you do, a couple things about that. Number one, when you do, and you're going to compare quotes, get a specific quote, and get it in writing. And if you're going to get multiple quotes from lenders, get them all on the same day. That's very, very important. I can't stress that enough. Why? Because when you want to compare quotes, they all have to be based on the same market conditions. So if you get a quote today and you're comparing it to a quote from 2 weeks ago, you can't do that. That's not a valid comparison, because each quote reflects different conditions on that day. So you always want to shop around, of course. And if you're going to get quotes, get them in writing, get them in detail. You can get a worksheet, not a loan estimate, because that's an official document. You can get a worksheet, get it in writing, get it in detail, and make sure that when you get multiple worksheets, it's all within the same day. The third thing he said was, when you're going to make the decision, to compare the rates, the rate offer, and the closing costs. Well, again, another duh moment. Of course you're going to do that. If you're going to shop around and you're going to get quotes and you're going to get them in writing, then you're going to choose a lender based on who's going to give you the best option in terms of the rate and the closing costs. And once you compare all of them based on the same day, then you can make your decision. So that's just kind of obvious common sense, right? So I don't know why that's a major strategy, or at least a major strategy to announce. That's already a given in this business, and has been, frankly, for years, if not decades. The fourth thing he said, and I will support him on this, once you've made your decision and chosen a lender, lock your rate immediately. Don't float it. Don't get caught up in thinking the Fed's coming up with the next meeting and that's going to help the rate improve, and therefore you're going to wait. We've just all learned that in this last couple of weeks. Don't hold off on your rate lock. Just lock it. Get it in place. Set your mind at ease. You know what your worst case is. I can't tell you how important that is, just emotionally, to eliminate anxiety and stress. So if you start a refinance transaction in particular, not to mention a purchase, because you got a limited amount of time to close, lock the rate. Don't mess around on that. If you turn out to be quote unquote wrong, thinking that a week or two after you start your transaction, the mortgage market has improved, rates are better, all is not lost. With almost any lender, we can renegotiate the rate lock. We can make a request to renegotiate the rate lock if things improve. But if you lock immediately, You're protecting your upside. And I can't stress how important that is. So with that fourth, major point in Dave's strategy, I will support that 100%. He is right. Now, the fifth one is, of course, you got to go through the underwriting process. Again, that's obvious, common sense, nothing new. Our job in particular as a mortgage broker, our job is to help you navigate through the underwriting process and get you through that process as quickly and as efficiently and with the least amount of stress as possible. And one thing I'll tell you about the underwriting process, the best thing to do when you're confronted with a list of conditions or items that the lender wants or their underwriter wants, don't dispute it. Don't resist it. Just give them what they want. That's the best thing to do. I always tell people that, look, some of this stuff doesn't make sense. Some of it seems illogical. Some of it seems like a pain in the rear. But don't get bogged down complaining about that. The best thing you can do when you're going through the mortgage process, and in particular the underwriting process, when they ask you for a piece of paper, you can grouse about that and complain about it. I'm happy to complain to me about it. I'm a good listener. I'm going to help you understand why they're asking that for that, and let's just get it to them as quickly as possible. I can't stress that enough. It will make the process much more anxiety free and less stressful, and get you closed quicker than otherwise would happen if you get bogged down in resisting what they're asking for. So just cooperate. You can provide your commentary, but just give them what they want. Take the path of least resistance. You'll be happier in the long run, and you'll get your deal closed sooner. And then, of course, the last major point of his strategy was close the loan. Well, obviously, you're applied for the loan. You want to close the loan. So after you get through the underwriting process, you're going to get your file to something called clear to close. We call it CTC. So once you get to CTC, then you're pretty much home free. It's just a function of going through the closing process. First, there's going to be a document called a CD, or closing disclosure, that'll be issued to you. You've got to sign that. Then you have to wait 3 days before the next step, which is the actual closing documents that have to be signed. And that's what has to be signed for the loan to actually fund. If it's a refinance transaction, you have to wait 3 more days after that for a right of rescission period. If it's a purchase transaction, it can close literally or fund literally within a day or two after you sign your closing documents. So Dave's major mortgage and interest rate strategy in reality is just common sense steps you should always take. And frankly, most borrowers have always taken, but it's a good reminder of the steps to go through. And in particular, like I said, always lock in your rate right away. Always get your quotes in writing. And when it comes to underwriting, just give them what they want. Don't resist. The sooner you do that, the sooner you're going to get to that happy stage of closing your loan. So that's my comments about Dave Ramsey. Like I said, I wish I was getting the kind of checks he's getting for that kind of advice.
Well, I looked at your major points, and I'll be darned, they were exactly the same. I was going to add to it, but I'm like, these are exactly the same. The only thing that I wanted to ask you about was when you talked about shopping around, and I flashed it on the screen there just for a second. And I think it's important to note, when you're out there shopping around, your rate is going to be determined by what the broker is being paid on their lender fee. Yes or no?
Yes, in fact, yeah. Thanks for bringing that up, because I failed to mention that. When someone is shopping around, whether it's a purchase mortgage or refinance, and in particular refinance, when you shop around, understand that when it comes to the mortgage originator you're dealing with, in particular if it's a loan broker, the rate you're going to get is going to be affected by or influenced by how much that broker is going to be paid by the lender. All of us brokers, when we sign up with lenders to deliver loans to them, we have to basically sign a document that declares what we want that lender to pay us when we deliver a loan to them. And that document has a range of what they call lender paid comp, running from 1% up to 2.5% of the loan amount. Well, common sense tells you, when you're comparing a originator to originator, and if one originator's only wants a 1% from the lender for the loan, and another originator wants 2% from that lender for the same loan, well, you're going to get a higher rate with that lender or that originator who's asking for 2%, because it's not free. I mean, the lender is going to pay that 2% to that particular originator, but it's going to be reflected in your rate. And if they've got to pay 2% instead of our 1%, you're going to face a higher rate than if you get a quote from us. And that kind of spread, 1% versus 2%, that can be easily a quarter or 3/8 of a percent in rate. So yes, all the viewers should know, when it comes to the loans we originate, in particular refis, we will originate that loan at a 1% lender paid comp. So if you're going to shop around, as you should, be sure to check with us too. We will give you a written detailed worksheet right away, no delay. I've heard borrowers say, oh, I'm still waiting a day or 2 or 3 days later. It shouldn't take that long. You call me, I can have it to you in an hour or two. Get that. Understand that what we're going to quote you is based on us only getting 1% from the lender, and that's going to mean a better rate for you.
Art, thank you very much. I was going to ask one more question, but that would only be rubbing salt in the wounds of those people who didn't lock in their rate when you suggested. With that, Art, I'm going to turn it back over to you. Great. Thanks for answering so many good questions. And remember, Art with Mortgage Works is the home of 1% broker lender fee. So as it says, hint, extremely low saves you money. So if you're paying more, you're paying more. Thanks, Art.
All right. Thanks, Jeff.